taxpayer reduces the tax payable. Illegal means, we say through which, we say the taxpayer, we say minimizes, we say minimizes what we call the tax payable, and we say to carry. So how do we evade taxes? How do people evade taxes? How do people evade taxes? Ways of engaging in tax evasion. Ways of evasion, just say ways of evasion. Ways of what we call evasion. We have said evasion is not allowed by the law. And if you're engaging in evasion, fines and penalties will accrue to the taxpayer. So what are some of the ways that people engage in tax evasion? We say non-declaration of taxable income. One of it is what's called we call it declaration of what we call of the tax payable. Taxable, we call it taxable income. Non-declaration of what we call the taxable income. You're making money, but you don't declare. So, but again, you can also under declare. You made 50 million and you're saying 10 million. We call it under declaration. Under declaration of what we call the taxable income. What we call under declaration of what we call the taxable income. Then you can also talk about overstating expenses. Overstating what we call the expenses. You have expenses of 1 million, but you're saying that you have expenses of 20 million. Apart from that, what are some of the ways that you can evade taxes? Again, also non-declaration. You make money, but you don't declare. Non-declaration, we say non-declaration. We've talked about under declaration of taxable income, but at the same time, you can claim for relief that you're not entitled to tax evasion. Together, team, we respond with a yes if you're together. If we are together, we respond with a yes. Tubonyeze yes kama tuko pamoja. If we are together, we respond with a yes. Perfect. So then we move to the second concept. We call it tax avoidance. The second concept, we call it tax avoidance. We call it the tax avoidance. So what do you mean by tax avoidance? When you say tax avoidance, what do you basically mean by tax avoidance? Tax avoidance, number one at the back of your mind, is legal way of reducing tax payable to the government. You say is a legal means. We say of reducing what's called the tax payable, and you say to what you call to the government. Is a legal means of basically reducing what's called the tax payable, and you say to the government. It is what you call a legal means through which you can minimize tax payable to the government. But in essence, it basically doesn't attract what you call penalties and interest altogether once discovered. If it's discovered that you're avoiding taxes, it doesn't basically attract what you call fines and penalty. The taxpayer can only seal the loopholes altogether. So then we can talk about briefly ways of what you call tax avoidance. How can one avoid taxes? How can one legally avoid taxes? Through financing. Number one, we can talk about through what you call financing. Through financing. We call it through financing. If basically you have a chance to finance through shares or debt, which one we do finance through? So we have debt and shares. If you have a chance to finance through debt or shares as a tax person, why debt? Because interest that accrue from a debt are treated as allowable deduction. Interest that accrue from a debt, allowable deduction. while we understand that the cost of shares, which is dividend, are not allowable deduction, while the cost of shares that we call dividends are not allowable deduction. Are we together? So one of the ways, again, you can also invest in areas. Invest in areas where incomes, we say, are exempted from tax, are exempted from what we call from tax. So invest in areas where incomes, we say, are exempted from tax. Invest in areas, we say, where incomes are exempted from tax. Invest in areas where incomes are not subjected to tax. We can also talk about where withholding tax, WHT, withholding tax, is what we call is final tax. Where withholding tax is final tax. But apart from this, you can also, instead of leasing an asset or buying an asset, you basically decide to buy an asset because with an asset, you can claim what you call investment allowance. We can talk about claiming what you call investment allowances. So this is buying instead of leasing an asset. Buying, and you say instead of what you call of leasing what you call an asset. Buying instead of leasing an asset. Together, team. We respond to yes if you're together. Give me a yes if you're together. Perfect. So then we go to what we call anti-tax avoidance provision. Anti-tax, I want to talk about anti-tax avoidance provision. Avoidance provision. So what they call the anti-tax avoidance provision. So what is anti-tax avoidance provision? Anti-tax provision. So we understand at the back of our mind that tax avoidance is allowed by law. Together, Kotuka and Tabla, we understand that tax avoidance is allowed by the law. That the law basically allows what you call tax avoidance. allows what you call tax avoidance. We say that in certain circumstances, we say that the Income Tax Act empowers the commissioner to reject some transaction. The income tax law empowers the commissioner. We understand that income tax laws, we say empowers the commissioner, empowers what we call the commissioner, empowers the commissioner, we say to reject some transaction geared towards avoidance. I'm saying although tax avoidance is legal, meaning permitted by the law, the Income Tax Act basically empowers the person that we call commissioners to reject some of the transactions, with the intention to avoid taxes or to reduce the tax payable, to reduce what we call the tax pay, that are geared to reduce what we call the tax payable. I want to talk about provisions in the Income Tax Act. The two provisions in the provision, call them provisions in what we call in the Income Tax Act. Provision, and you say provision in the Income Tax Act. So one of the first provisions in the Income Tax Act, we call it Section 23 of the Income Tax Act and Section 24 of the Income Tax Act together. So we have Section 23 One is Section 3 of what I call of the Income Tax Act, and we have Section 24 of what I call of the Income Tax Act. So one of it we were supposed to do is part of the things that we've left pending. One of the things that we were supposed to do that was basically on the shortfall distribution of dividends altogether. So we start with Section 23. We start with what's called Section 23. We start with Section 23. So when you look at this Section 23, if you look at Section 23, are we there, team? If you look at Section 23, if you're there, we give it a yes. So either are we there? If you look at Section 23, it basically empowers the commissioner. To reject what's called expenses transaction for the purpose to reduce tax payable. It basically rejects what we call expenses. So what we call transaction with what we call the purpose to reduce what we call the tax payable, reduce tax payable. And all of these are things that people normally want to do with an intention to reduce the tax payable. So the question is, what are these transactions that the commissioner is basically empowered to reject? What are these transactions? Are we together? So this is payment of salaries to relatives and minors. Payment of what we call salaries to relatives and what we call a minor. That is Section 23. Payment of salaries to relatives and minors. So you can decide and say that your brother is going to earn $500,000 with an intention to reduce what you call to overstate your expense. So instead, or you pay a minor a lot of money with an intention to increase your expenses, which you say, in that case, the commissioner basically is empowered to reject such a transaction. Together, team, we respond with a yes. Then you have Section 24. So Section 24 of the Income Tax Act, understand is something that we call it shortfall. We call it the shortfall distribution of what we call of dividends. It basically touches on shortfall distribution of what we call the dividends. It touches on what we call the shortfall distribution, and we call it the shortfall distribution of dividends. And I think as we do those questions, you will even understand it much better. Are we together? Shortfall distribution tax. Are we together? Shortfall distribution, just call it tax. Shortfall distribution tax, sorry. Call it the shortfall distribution tax. And as we do it practically, you'll see, are we together? If there's a shortfall in distribution of income, are we together by company? Are we together? If there's a shortfall in distribution of income, and as we practically do it, it's part of the specialized, that is shortfall distribution tax altogether. As we work on that, we will understand what happens. Together, we respond to this. Are we together? Where we talk about retention, we're saying that if you have this, how much should be distributed and how much should be retained. And if you retain more or if you distribute less, then that basically lead to what we call shortfall distribution. Together, we respond with a yes. Then I proceed to what we call types of tax investigation. I proceed to what we call tax investigation. We proceed to what we call types of tax investigation. So we proceed to what we call types of what we call tax investigation. We call it types of what we call of tax investigation. Investigations. Types of what we call tax investigation. So which types of tax investigation are you aware of when you say types of tax investigation? So we basically have what we call compliance. What we call compliance checks audit or investigation. We have comprehensive audit, so what we call investigation. We have finally the last one, we call it post-clearance audit / investigation. I've talked about three things. One is compliance check. We call it the compliance check. Check audit. Audit. The word audit stands for investigation. We have what we call comprehensive. We call it the comprehensive. We call it comprehensive audit or investigation. Comprehensive audit. We have it as the comprehensive audit. We have what we call post-clearance. We call it post-clearance. Post-clearance audit. We have what we call the post-clearance audit. So these are the types of tax investigation. We call it the types of tax investigation. Give me a yes if you're together here. The types of tax investigation. Allow me now to just delve on each. What does the word compliance means? What does the word compliance means? So when you say compliance, we're checking on tax rules altogether. Adherence to tax rules and regulations altogether. So when I say compliance, audit, adherence to tax rules and regulation. What do you call adherence to tax rules? Just a minute. So we proceed. Sorry for that interruption. So we proceed. So whenever we touch on what we call compliance check audit, stroke investigation, that basically touches on adherence. What do you call adherence? We call it adherence to the tax rules and regulation altogether. So we call it spot check of balances in tax payers book, spot check in what you call in the taxpayers books. Taxpayers' books to confirm adherence, to confirm to what we call to rules and regulation, to rules and what we call regulation. To confirm what's called adherence to what's called rules and regulation. So a spot check into the taxpayers' books to confirm whether they are adhering to rules and regulation. Comprehensive. So the word comprehensive basically means detailed altogether. When you talk about the word comprehensive, that is basically what's called a details altogether. Are we together? That is more detailed. When you talk about adherence, that is more detailed. Are we together? So when you talk about comprehensive, that is more detailed. So it involves taxpayer investigating and auditing books of account of the taxpayer. Are we together? Auditing the books of taxpayers. When you say comprehensive, it's more detailed. Are we together? But this normally happens in circumstances. We say one of the circumstances where this would basically work is when you have what's called a tax fraud. So the word comprehensive basically means detail. But you're saying one of the circumstances that would lead to that is where we have what's called a tax fraud. Together, team. Are we together? Are we together? So it's going to check all forms of tax, investigate all forms of taxes. That's why you say investigate what you call all forms of what you call taxes. So you're suspected to basically be involved with fraud. So this basically lead to investigation of all forms of taxes. We have pay, we have VAT, and we have other many forms of taxes. Give me a yes if you're there. Investigating what you call all forms of the tax. Perfect. Then lastly, we have what you call post-clearance audit, to what we call investigation. So when does this happen? So this is one of the things where it happened. This basically happens to what we call importers. We call it importers of what we call goods. Importers of goods. It occurs in scenarios where we have importers of goods. It occurs in scenarios where we have what we call importers of goods. Are we together? So they have basically been cleared at the point of entries. Are we together? At the point of entry to the country. Are we together? To determine the payment of correct amount of custom duty. Determine This is going to determine what we call the payment. We call it the payment of what we call of the correct amount of duty. Which have been cleared. We carry that to basically determine the payment of the correct payment of the correct. We have it as correct amount of duty. Together. Payment of the correct amount of duty. Give me a yes if you're together. If we are together, they have been cleared. Importers have been cleared. So this is carried to basically determine whether they are paid. So objectives of tax audit initiated by KRA. What are the objectives of tax credit? We call it objectives of what we call tax investigations. Investigations initiated. We say initiated by what's called by the KRA. So what are the objectives of what they call the tax investigations that is basically initiated by KRA? Why do they initiate these tax investigations? So one was compliance. Ensure compliance. One is compliance. We call it compliance to what we call to tax regulation. So one of the objectives of a tax audit is basically to ensure what we call compliance to tax regulation. Are we together? Are we together? Deterrence of evasion. Deterrence of what we call of evasion, which is illegal. Deterrence of what we call evasion, to deter what we call evasion of tax. We call it deterrence of evasion through proper assessment of the tax revenue. So the second reason why they carry out, so that people don't basically evade, deterrence of evasion. And I want to ask the question, if you look at the current times, there's been more assessment together. Why do you think the taxpayers initiated a lot of tax investigation? There's a lot of assessment that is being done. Why? The essence of it is basically to deter what we call evasion of tax. Of it is basically to deter what we call evasion of tax. Respond with a yes. Perfect. Then we have identify possible improvement. Possible, identify, we say identify. Call it identify, what we call possible improvement. Identify what we call possible improvement. Basically, identify what we call possible improvement to ensure assessment are made simple. Possible improvement, ensuring assessment. We say assessment have been made simple. Have been made simpler. That assessments have been made simpler. To make this assessment simpler. Do you think assessments are simple? Do you think there is improvement on these assessments that are being done? Still not simple. Still not simple. So we have what's called fairness in the tax system. Fairness in the tax system. For many years, some people have not been paying taxes, but better than before. For many years, we talk about fairness in the system. For many years, are we together? Some people have not been paying taxes. Is that true? For many years, some people have not been paying taxes, and majority have not been paying taxes. Are we together? So with this assessment and this investigation, we are bringing to books those who are not paying taxes. Are we together? Are we together? But again, valuable information to tax authority. We have what's called valuable information. It gives valuable information to what we call to the tax authority. This provides valuable information to the tax authority. Remember, as they carry out this investigation, this provides a lot of insight in terms of compliance of tax, in terms of how better they can basically improve or together. Trends in taxation, very important trends. They're able to come in terms of trends in terms of payment of taxes. They're able to know that. Common issues that affect the taxpayers are together. Potential gaps, but at the same time, we talked about valuable information to the tax authority. So we can have issues to do with trend, gaps that are there in the tax authority so that they seal those gaps altogether. So then I want us to talk about responsibility of tax consultants to a client. Responsibility of what you call of a tax consultant, to a client during a tax audit. So what do you think are the responsibility of a tax consultant? Because some of you are applying to be tax consultants. So what do you think is the responsibility of the tax consultants, responsibility of the tax consultants to a client during tax audit? What do you think is your role as a tax consultant to a client during tax audit, to a tax client during audit? Yes, represents. So that is what we call advocacy. One of it, we call it advocacy. So one of the things is what we call advocacy. We call it the advocacy. Advocacy altogether. It serves as the advocate of the client. Are we together? Serves as the advocate of the client. Is that true? Represents client interest and communicate directly to the tax authority. And that is what we call advocacy. I want to ask, is it a personal question or a question that gives insight? What do you think about involvement of lawyers in this tax investigation? What has been your view? Basically on involvement of the lawyers in this investigation. What has been your view of involvement of lawyers into these investigations? What has it done, involvement of lawyers in these investigations? What is your view on it? Very fast, just talk about it very fast. Involvement of lawyers. Advice on legal rights. Okay. For those who carry out tax investigation and they represent client, has it been fair in terms of what a tax consultant does and what a lawyer does? And I think it's posting something. If you look at tax consultants, they're really thinking, if I'm a tax consultant, I also need to do law. Are we together? But in cases where they involve Fonduto, we understand that they take a lot from the tax consultants. They're the ones now on the picture. Are we together? And that's why you find a number of tax consultants that is sorting also to do law. Are we together? Because when they get to those cases, law will always have a bigger share of those cases. Is that true? The lawyers normally have bigger shares of those cases. And most of the tax consultants, you realize that one of their dreams or one of the things that they basically do, they also get into law to understand the aspects of the law. Yes, they're clueless, but when they represent you, you give them that information. Are we together? You give them that information. Did you know that law is very much didn't you know that law is also very protected a lot, a profession that is protected? I was just saying some of the emerging issues where you find tax consultants will do the bigger chunk and the lawyer comes in to represent. So then that is the first advocacy, representing what's called the interest of the client and communicating directly with the tax authority. Are we together? So he ensures that the client's position is basically represented professionally and accurately presented together. But at the same time, he negotiates, for what you call for a lower tax, for what you call a lower tax penalties and liability. Then we have what you call organizing, what you call records. We'll talk about organizing what you call the records. Who organizes the records? Sometimes the client does not know, especially when a client has not been keeping books. Do you think a client will know how the records should go? So it does what? We call it organizing what we call the records. It does what we call organize what we call the record. So one of the roles is to basically organize what we call the records. Organize what we call the records together. Organize what we call the records. Is that true? Do you see those things happening? Where you'll organize, you simply, maybe you liaise with employees or those who are closer to the client. I need this and this and this. Once you communicate with the tax authority, then you organize. Give me this, and then you organize them and put them in order together. Then you have what you call error correction as one of the function. One of the responsibility is to do what error. We call it correction. We call it the error possibility. We call it error correction. So if there's any error that has been found in the books of the client, it is a consultant who needs to come in and help correct them in a way that mitigate penalties altogether. It's supposed to come and correct them in a way that basically mitigate what we call penalties and tax liability exposure. So if there are errors in the books of account, you're supposed to come in a way that should basically mitigate them to reduce what we call penalties and interest. To reduce what we call the penalties and interest. Then we say risk management. Risk management. What do you call risk management? Call it the risk management. So risk management is simply mitigation of risk. So the other name for risk management is simply what we call mitigation. We call it mitigation of what we call of the risk. So risk management is simply what we call mitigation of the risk. Mitigation of what we call the risk. That is what we call the risk management. We call it mitigation of risk altogether. Assess the risk altogether, advise how to manage the risk effectively. So those are some of the roles of the tax consultants in relation to the tax audit altogether. We respond with a yes. Liberty, yes. Perfect. Events which trigger what we call tax investigation. When we talk about events which trigger, which say trigger, we call it trigger what we call tax investigation. Events that basically may trigger what we call tax investigation. So what will trigger tax investigation? Why would Kenya Revenue Authority come for a client? What are these events that may trigger an investigation? What are these events that may basically trigger what we call a tax investigation? These events that may trigger what we call a tax investigation. Tax investigation. One of it is audit of a related company. Maybe a subsidiary was audited and anomalies were found. Associate was, so audit of a related company. That may trigger what we call a tax investigation. Are we together? Are we together? Then again, we have issues to be non-compliance detected through compliance checks. Like if you look at part of 2024, are we together? 2024, when a lot of assessment was being done, you realize that most people were being discovered and not paying tax. Was it the year 2024? 2024. If you look at 2024, a lot of checks were being done. Is that true? 2024. Team 2024, there's a lot. So when you talk about non-compliance checks that are basically recognized during compliance check, but again, media. Have you ever seen some companies that are highlighted by media? Are we together? Or the lifestyle, media just basically looks at your lifestyle and it triggers all together. Where you say, you go to the media and say that you have money, and through the media, your basically investigation is carried out together. You say you're very rich, and we look at your records, we notice that you do not pay taxes. That is the source of information altogether. But again, also some other forms of taxes. Let's say, for example, you're dealing with vertible goods. And vertible goods, your sales, in a year, we notice that your sales is running to millions. But if you look at your goods, we also understand that your goods are vertible. Do you think that will trigger VAT? Will that definitely trigger VAT? Rafael Gital. You're filing corporation tax, but at the same time, we notice that you're dealing with what you call vertible goods and services. That automatically will trigger. Once you pay, the payee will raise questions on the VAT. So an investigation on VAT will basically be done together. But again, also continuously triggering what you call a loss for several years. You find somebody filing a loss for several years, that may trigger an investigation. Do you think it makes sense if you've made loss for the last 10 years and you're still in business? Do you think it makes sense? If you make losses for 10 years, does it make sense? Sorry for that. So when continuously you're making, losses, and for many years, you're filing losses for many years. One of the questions, even a normal person, just simply, there's alarm here. So we say audit of a related company. We call it audit of what we call of a related company. Audit of what we call a related company. Call it audit of a related company. With a subsidiary that may trigger that. Then we say non-compliance detected through compliance check. Non-compliance. We say detected through what you call through compliance check. Through what you call the compliance check. So non-compliance that is detected. We say detected through compliance check. Then we have public media, television and radio. Call it the public media. i.e. television, etc. We call it the public media, i.e. television. Then we have continuously reporting loss. Continuously. Call it reporting a loss. So if you're continuously reporting a loss, that would raise alarm. Are we together? Information provided from different form of tax. Info, we say from different, call it different form of what we call of tax. Info that is provided from different form of tax. Together, team. Info that is provided from different form of what we call the tax. I hope that is at home. I hope to Kosawa. So again, realize that margins, there's what we call the industry margins. Are we together? For every industry, there's always a profit margin. Have you ever known that? That every industry has margins altogether. We can, SMEs, we know the Kenya Revenue Authority. Basically, you ask yourself, how do they basically carry out assessment? There's what we call industry profit margins altogether. There's what we call the industry profit margin. So if your profit margin basically do not correspond, especially with the industry profit margins, then that will trigger what we call an investigation. But then we have, very importantly, third-party information, where we have third-party information. We have what we call third-party information. Information is released from third-party or the whistleblower. Those are the sources of what we call sources of tax investigation together. Very important, I want you to remember the word industry margin, where you have every industry has a margin in terms of profit altogether. Then as an MP, I want us to talk about protection measures placed for whistleblowers in Kenya? Protection, we say protection measures put for what you call the whistleblowers in Kenya. So what are the protection measures that are basically put for the whistleblowers in Kenya? What are some of the protection measures that are put for the whistleblowers in Kenya? Tim, what are these protection measures that we basically understand that are put for the whistleblowers in Kenya? Protection measures that are basically put for the whistleblowers in Kenya. Number one is confidentiality. This information, they're not identity, not disclosed. We have it as confidentiality. We have it as confidentiality altogether. They're kept anonymous altogether, which make it become very difficult to know them altogether. Then you have what's called witness protection. The next is what's called the witness. We call it the witness protection. We call it the witness protection. Call it the witness protection. Are we there? We call it the witness protection. Are we together? The protected. Are we together? The statement in court. Are we together? Protection, collaboration with witness protection agency. So this is where there's witness protection agency will protect this altogether. Secure channel of tax reporting. You know, have a secure channel, provision of secure, we call it secure channel for what you call for tax reporting. Call it secure channel for what you call for tax reporting. Are we together? Immunity, expand on that.